Hi, good morning, everyone. Welcome to this live show. If you guys can, I think some of you have already joined us and you're early, all right? And you can see and hear us. Just type a GM for good morning. Let me know if we're live and you can see and hear me. You can see my screen as well. Welcome to this live show whereby we'll be talking about some of the top Hong Kong stocks, right? Let's see who is here joining us today. Okay. Hi, good morning. We have LK Pua. Let's just wait for a few more people to join us. All right. And today will be very interesting, guys, because not only about this Hong Kong stocks, right, but also how I have a very special guest today, right here, Marcus from SocGen, who will share more with you guys about how you could actually amplify your returns using this very unique product. All right. So let me know, guys, if you can see and hear me. Just wait for a few more people to join us. Thank you so much for joining us live. Good morning. Hi, Quincy Fang as well. Morning as well. Type of GM for good morning. Let us know that we are live before we get started. And I hope that you guys can get value today in this live show. So if you've been following me, guys, every Friday we do what we call an Ask Me Any Stock session, whereby we talk about Singapore or even the US market, right? Whereby we cover the stocks that you guys are asking about, right? In Singapore or US. But today will be slightly different because today is Wednesday, right? It's not Friday, right? So it's not our usual Ask Me Any Stock session. It's something different. We try to do it like once a month, whereby I invite a very special guest just to add more value to you guys, all right? Just to also share some stock opportunities, all right? And more importantly, what you can do with these opportunities, all right? So very simple, right? In today's live show, we'll be talking about the Hong Kong market, right? Hong Kong market. So if you're looking at the Hong Kong market, right, or maybe even the Chinese stock market, right, that Chinese stock that are listed in Hong Kong, well, this is for you. That's definitely where you get some of those ideas as well, right? So very simple. We'll talk about some of the maybe Hang Seng Tech Index, right? Some of the top Hong Kong stocks, and I will also pass on the mic to Marcus to share more with you guys on how you can actually use DLCs or daily leverage certificates to potentially magnify your returns, right? So thank you so much for joining us. If we have only just met, right, you have no idea who I am, you're like scrolling through YouTube and Facebook. My name is Joey Choi, top-tier advisor, trader in Philip Securities, and I've been doing this for more than 15 years now, and I pretty much use what I call the one good trend strategy, right, to know when to get in, when to get out, and we kind of like align ourselves with the trend of a stock. So I have a tool that I'll be using to analyze the top Hong Kong stocks that I'll be sharing with you guys later. All right, so later that's where I'll talk more about it. All right, so that's me. All right, that's me. My forte is pretty much in stocks. We do Singapore stocks, US stocks. All right, and today will be more on the Hong Kong stock market. All right, so yep, that's what will happen. Okay, so before we invite Marcus up, very simple. Just type let me know. Just type a HK for Hong Kong, guys. Type a HK for Hong Kong. If you're ready to go into some of the top Hong Kong stocks, let me know. All right. Good morning. Hi, Fiona. I think we have a lot of familiar, our familiar names. Thank you so much, Serena, as well. Good morning. Good morning. All right, Esther, Lawrence. All right, so more and more people are slowly joining us. Okay, so maybe let me pass on the mic to Marcus from SocGen, right, who is what we call an expert in DLC, right, daily leverage certificates, right, whereby Marcus will briefly talk about DLCs, maybe share a bit on himself, and before we get started for today's session, right? Marcus, go ahead, all yours.
Hello, Joey. Hi. Good morning, everyone. So quick introduction. My name is Marcus. I'm from Société Générale. All right, we are a French bank. All right, we are a French bank. You can say the equivalent of DBS in France. But we do have an investment banking unit here in Singapore, and we are the issuer of this daily leverage certificates, all right, that Joey has mentioned, that are listed on the SGX securities market. All right, so it's not something new. We've been around for the last 9 years with these DLCs listed on SGX. So this is a very interesting product shelf on SGX where you can use the DLCs to gain exposure to Singapore stocks, Hong Kong stocks, as well as the US stocks. All right, so only one 3-in-1 instrument where you can work with one instrument, you can get exposure to all these 3 different markets. So definitely it can broaden your exposure here on the SGX, right? So with that, we also have the leverage component of this instrument. All right, this instrument, daily leverage certificates. You see clearly in the name of the product, there's the word leverage over there. So this is a leverage instrument, all right, giving you that 3 times, 5 times, or 7 times performance of the underlying stocks, daily performance. All right, so this is very much similar to your leverage and inverse ETFs. All right, so widely popular, I guess most people are familiar with ETFs. Most people are familiar with perhaps leverage ETFs. For those of you who trade the US markets, you may be familiar with your TQQQ, SQQQ, or even your 2x Tesla, 2x Nvidia. Those are leverage and inverse ETFs. And the DLCs have exactly the same kind of payoff as your leverage and inverse ETFs, but we go a bit higher in terms of leverage, right? We go up to 3 times, 5 times, or 7 times leverage of the underlying stock or underlying index daily percentage performance. There's also a long DLC and a short DLC that you can use to trade both directions of the market, similar to leverage and inverse ETFs. And it's all traded on the SGX, just like a stock. So basically, you don't have to open an account with SocGen. As long as you have a Philip Poems account or any regular stock brokerage account, you can trade these DLCs readily on the SGX securities market. All right. So there's no need to open any account with SocGen. It's just directly trading on the SGX, just like a stock. All right. SocGen, we are the issuer. We are also the market maker for these DLCs. So we do list them. We do list them on the exchange, and then we provide liquidity every day for each and every one of our DLCs for people to buy and sell the DLCs readily. All right. So the liquidity is found in the bid and ask prices, bid and ask volumes over there. You can see that we are constantly quoting the prices of the DLCs to give you that 5 times or 7 times performance in line with the underlying stock move, as well as the bid and ask volumes are there. At least $500,000 on each side for you to be able to buy and sell the DLCs readily. All right. So liquidity should not be an issue. We are there for each and every one of our DLCs throughout the day, and we have over 200 DLCs listed on SGX. All right. So it's quite a wide range of underlyings and DLCs that we have. As I mentioned, it covers both all 3 markets, Singapore, Hong Kong, as well as the US. Of course, today the main topic we're going to talk about is the Hong Kong underlying, and it's also our most popular range. A lot of people use our DLCs here on the SGX to gain exposure to Hong Kong indices and Hong Kong stocks. All right, because perhaps it's not that cheap to trade Hong Kong stocks directly on the exchange, or even to get exposure to Hang Seng Tech. So you have an instrument like the DLCs that's listed on the SGX that can give you that kind of capital efficiency or cost efficiency especially if you are actively trading Hong Kong stocks. And we cover a wide range. All right, so Hang Seng Index is a given. We do have the DLCs on them up to 7 times leverage. All right, we do have the Hang Seng Tech Index. So that's our star product, Hang Seng Tech DLCs. We do have 7 times long, 7 times short DLCs on Hang Seng Tech Index, as well as a whole slew of Hong Kong stocks, the China Terrific 10. We also have some of the old economy stocks like Ping An, Hong Kong Exchange, etc. So we do have a wide range of Hong Kong stocks for you to choose from. I think almost 50 Hong Kong stocks that you can choose from, the large cap names, as well as some of the the more sexier ones like POCMAT recently, I guess. So we do have 5 times long and 5 times short DLCs on the Hong Kong stocks as well. For Singapore range, definitely, MSCI Singapore Index, as well as the main blue chip Singapore stocks. We are looking to expand the Singapore stock range. We currently just offered Citrium as well. And upcoming will be more Hong Kong stocks, Singapore stocks for you to choose from as well. But definitely the big ones, the 3 Singapore banks, Capcorp, Keppel, Sembcorp, Singtel, we do have 5 times long, 5 times short DLCs on them as well. The US one is our latest addition. We have the 3 key US indices, NASDAQ, S&P, and Dow Jones. But since 2024, we've been doing 3 times long, 3 times short DLCs on the Magnificent 7 stocks, as well as broaden it recently in the last couple of months to your more sexier names like Micron, Palantir, Netflix, that you can choose from as well. Okay, so we have a wide range for you to choose from. You can view the full list of DLCs on our website, dlc.socgen.com. But before we continue handing back to Joey to talk about the Hong Kong stocks, I think it's just a quick one to give you the basics of what the DLCs can do for you. The DLCs, as I mentioned, is like a leverage and inverse product, right? So the formula of the DLCs is quite straightforward. The daily percentage performance of the underlying stock or underlying index multiplied by the leverage factor, whether it's 3 times, 5 times, or 7 times, will equals to the daily percentage performance of the DLC. So for example, if DBS is up by 2% today from this previous day close, my 5 times long DBS DLC will be up by 10%, while my 5 times short DBS DLC will be down by 10%. All right. So your gains are magnified, but also your losses are magnified. So that's as usual, leverage is a double-edged sword. So please be careful. Your gains and losses can be magnified as well. All right. So this happens every day on a close-to-close basis. The DLC will give you that 5 times performance of the underlying stock's daily percentage performance. All right. So conversely, if DBS was down by 2% instead today, then my 5 times short DBS DLC will be up by 10%, while my 5 times long DBS DLC will be down by 10%. All right. So, if you are bullish on the underlying stock, you buy the long DLC. But if you are bearish on the underlying stock, you think it will fall and you want to profit from it, you buy the short DLC instead. Right. So you have two sides of the coin to play. You can play the long DLC or you can play the short DLC depending on your view. All right. So last two slides before we continue on. So just an example of what I mean by where the 5 times or 7 times performance is. See in this screenshot over here from our website, you can see that our 7 times long Hang Seng Tech DLC was up by around 28+% on this particular day on 8 April this year. All right, when Hang Seng Tech Index was up by 4%. All right, so that's where the 7 times performance is. Hang Seng Tech Index is up by 4%. My 7 times long Hang Seng Tech DLC is up by 28%. All right, so that is a nice move on the 7 times long DLC, given the bullishness on Hang Seng Tech. All right, so this 7 times long Hang Seng Tech DLC has a code set SYHW. All right, so if you go into your POEMS trading account or you go to any regular brokerage trading account, you search for SYHW, you will be able to see this 7 times long Hang Seng Tech DLC over here. All right, so this is where the 7 times performance is on a close-to-close basis. And also, obviously, I mentioned gains are magnified. 28% is nice, but your losses can also be magnified. So the 7 times short Hang Seng Tech DLC was down by around 28% as well because of the bullish move on Hang Seng Tech DLC, on Hang Seng Tech Index by 4% gain on this particular day on 8 April earlier this month. All right, so that's where the 7 times performance is. So you can be clear. You can also see that the price of the DLC is different from the underlying stock or underlying index. So the DLC price is something that's arbitrary. We start off with $1, and then every day it just moves with the underlying performance every day. If underlying is moved by 1%, then this DLC will move up by 7% from that $1, and so on and so forth every day on a close-to-close basis. So you can see this 7 times Hang Seng Tech short is at 59 cents. The other one, 7 times long, is at 27 cents. So it's a small price, so you can gain exposure to this Hang Seng Tech Index or even the Hong Kong stock stocks with a much smaller sum that's opposed to buying the stock itself. So 100 units is the minimum board lot size, same as Singapore shares. So 100 units multiplied by 27 cents, I mean that's $27. That's your minimum investment sum, right? So you don't need to put a big amount into the DLCs to gain exposure to Hang Seng Tech or even to the Hong Kong stocks. You can do it in increments of 100 units multiplied by the unit price of the DLC. So definitely you can scale into your position easily. And of course, with this cost efficiency, you can reduce your transaction cost as well, because if you want to buy $1,000 worth of Hang Seng Tech DLC, all right, this one, it's just you just pay commission on the $1,000 as opposed to if you would buy the stock itself, for example, you could need to use a lot more capital to invest in the stock as opposed to the DLC, which gives you that 5 times leverage embedded in the price of the product, performance of the product, and not have to have such a big outlay. All right, so Hong Kong stocks is a very popular one for our DLCs because you use 1/5, right? 1/5 of the amount that you use to buy the Hong Kong stock itself, to buy the DLC instead, and that commissions, exchange fees, etc. is all charged on that 1/5 capital that you put out only as well. And you're charged Singapore clearing and trading fees, and the Singapore fees, exchange fees for the DLCs is 8 times cheaper than the stock itself. All right, so I think it's about 0.04% for trading Singapore shares, but not many people know that the DLC's exchange fees on the SGX is actually 8 times cheaper than that 0.04%. All right, so it's 8 times cheaper than stocks. So definitely, the exchange recognizes this as a trading product, as a leverage trading, short-term trading instrument. Therefore, the fees are also much lower as opposed to buying shares itself. Okay, so just a quick introduction to the DLCs. Hope you got a good idea. It's a bit like an LNI ETF, but higher leverage, and it gives you exposure to Singapore, Hong Kong, and the US markets here within the comfort and the safety of the Singapore stock market.
All right, thank you so much, Marcus. I hope that you guys are a little bit clearer right now, all right, on what DLCs is, right? So I think in a nutshell, I think Marcus really did a very, very thorough kind of introduction of what DLCs, daily leverage certificate is. I think not to worry, later we'll have more case studies, more examples. In fact, Marcus is going to show you guys on some of the top Hong Kong stocks that I go through later, all right, how you can actually choose which DLC to buy, all right, whether is it the long, the short, all right, and also, what's the leverage factor, right, 5 times, 7 times, right? So, I mean, in a nutshell, I think just to summarize everything, right? Basically, DLCs allow you to magnify your return based on the underlying stock. So for example, let's say, so we're looking at Hong Kong stocks today, but it can be Singapore, Hong Kong, or US. But for the underlying stock, if it to go up by, let's say, 2%, right, the normal underlying stock, on a 5x DLC or 5x leverage factor. So 5 times 2 will be 10%. All right. So you actually get to increase your return by 10% by getting on the DLC. All right. And this DLC is listed on the SGX, just like a normal Singapore stock. All right. So that's why it's very, very popular product as well. Okay, so let's go to get started. Maybe I'm going to share with you guys the 4 stocks in just a bit. All right, and of course, Marcus, I'll just pass on the Marcus as well later. What we can do on each of these 4 stocks. Right. So this show is sponsored by SocGen. Marcus is right here. Hope you guys get value. So let's get started. So just a quick disclaimer, guys. Whatever that's being shared today, same thing, right? It's just for education purposes only. All right. So please do your own due diligence. I'm not asking you to buy or sell any stocks that I'm going to share. I'm just sharing with you guys the framework, what the tools that we're using. All right, why is it our watch list? And you decide on your own actions as well, right? So let me know, guys, if you guys are ready for me to maybe just go ahead to go through what I call the Hang Seng Tech Index, type of T for tech, guys. If you guys want me to cover what we call the Hang Seng Tech Index, right? Hang Seng Tech, which is a very popular index, right? That tracks the technology stocks in Hong Kong, right? Let me know. T for tech, guys. If you guys are ready for me to go through the tech before we talk about some of the top Hong Kong stocks, let me know. All right, let's see, right? Hong Kong. So you guys are ready for the Hong Kong market, but how many of you are ready for the tech sector, right? Is the tech sector doing well, in the market, right? Are we seeing weakness in some of the top tech stocks, Alibaba, Tencent, Xiaomi, JD.com? These are all the popular tech stocks. Are we seeing weakness? What is the trend like? So let me just dive into these Hang Seng Tech stocks right now. So you can see that for Hang Seng Tech, right, index, HSTECH. Well, we have not been doing, well, I would say since like October last year. You can see quite clearly that we have found what we call lower highs, all right? And, if we bounce a little bit, sellers come back and push it even lower. So not very strong, I would say, in terms of the technology sector in the Hong Kong market. You can also draw what we call a downward sloping channel resistance line. So I would say a little bit of a downtrend, right? Not a very clear uptrend for sure, all right? It's more down than up for now. Downward movement in terms of prices, lower highs, right? And we are kind of like still below what we call the downward sloping channel resistance line, right? And if you take a look at what we call the moving averages, you can see that, the long-term trend rate, 100 days moving average line has gone below the blue line. And, long-term trend is a little bit down, right? In terms of the short-term trend, well, thankfully, we may have found a little bit of support over the past 1 month, maybe near that 4,600 level, 4,600. So I think we're kind of consolidating. Hopefully, we have found a bottom, right, in terms of the technology sector, right, from this 4,006 all the way to the 5,200 level. Look at this, right? So for the past 1 over month, when of course the US-Iran war started as well, saw a bit of weakness. We have been moving up, then down, up, down, and out, up again. I don't know where it's going down again, but you can see that is the range, 4,006 to that 5,200 level, right? So that's the kind of weakness we've been seeing in the market, right, in terms of the technology sector in the Hang Seng Tech Index. So let me go into this turn on, the 1 GT Pro indicator, right, to see if there are any bullish or bearish signals coming out. So I have these two, I call it one good trend pro indicator, all right, in a matter of seconds, right, we're able to turn on the bullish or bearish signals to see what it says, right? So let's turn it on, pump, and there we go, right? So you can see that for HSTECH, right, we had a couple of bearish signals. As I say, right, since October, there was some signs of weakness. The short-term trend was down. We got a bearish signal, all the way down, right? We got a bullish signal, went up for 1-2 weeks. What happens was in January, as we began the new year, we got 2 1 GT bearish signals, and it started to come down. Does it make sense? Right? So still weak, I would say. All right, still weak, I would say. A very key level to take note of would be if we can break this 5,200. All right, so if we can break the 5,200 level, I think that is where potentially we may start to see some strength coming back, a potential reversal all the way back to maybe that 6,000, right? 6,000 psychological resistance level. So that's a very key level, right? If you were to break the 5,002, so now it's 4,950, right? Somewhere over here, we're still below the 5,002, right? It's a very key resistance. So still consolidating for now. But if you were to break the 5,002, right, we get what we call a new bullish signal. Of course, if the short-term trend starts to turn out as well, that could be a potential trade setup in terms of a long position. Of course, Marcus will want to share with you guys later on how you can take a long DLC position to ride the upside from 5,000 all the way to 6,000. Or maybe you could also take a short position. I mean, if we were to continue to trade below the 5,002, like I say, right, we are like consolidating now, we may be heading down again, right? So anything below 5,002, unfortunately, is still a little bit weaker. A short position in terms of DLC short could be taken as well, all the way down to that same 4,600 support level. Right, so let me just go to maybe pass on the mic to Marcus to share with you. Now that I've given you a bit of my view on this HSTECH, one of the very popular tech index in Hong Kong, right? What can you do, right, with DLCs, right? What's the DLC to choose? Let me pass on the mic to Marcus to share a bit more on that, right? Marcus, back to you.
All right, thanks, Joey. All right, so Hang Seng Tech, as I mentioned, is really one of our star products on a 7 times long, 7 times short Hang Seng Tech DLCs. All right, so I think just to show everyone, this is our website, dlc.socgen.com. All right, so this is our website where we host the full list of DLCs that we have listed on SGX. All right, and we also share educational content, etc., on our website. But remember, again, you can use our website as a reference to see which DLC you want, learn more about DLC. But ultimately, you will go to your brokerage trading platform to trade the DLCs, all right? So under the products list over here is where we have our full list of products. So 224 DLCs that we have listed across a wide range of underlying stocks and underlying indices that you can gain exposure to. And then we have the long and short DLCs as well. So you can use this page to filter the ones that you want, all right? So if you want Alibaba, for example, then you will go Alibaba, and then you look for the long DLC, etc., and you can find the DLC that you want, all right? So I've taken the liberty to filter out the Hang Seng Tech DLCs that you could potentially use to gain a long or a short exposure. So I think today is a bearish day, all right? Today the Hang Seng Tech is down by around 2.2, 2.3%. So it's been a bearish day so far, and that's why you can see that a 7 times short Hang Seng Tech DLC 9B2W, that's the stock code of this DLC, 9B2W. I mean, it's up around 15%, so 7 times that of today's Hang Seng Tech downward move. Remember, if you are bearish on the underlying stock, underlying index, you will want to purchase the short DLC, all right? So you'll use the short DLC if you are bearish on the underlying stock. So remember, you always initiate your position with a buy trade, all right? You either buy the short DLC if you are bearish, or you buy the long DLC if you are bullish, all right? So today, it's a bearish day. 7 times Hang Seng Tech short is down around 15%. All right. So this price at the price of the DLC is around 15.4 cents. So if today, indeed Hang Seng Tech closes around this same level, just 4,950 points, etc., down 2.2%, then this DLC will close for today at 0.154, right? So 15.4 cents. All right. Then what happens tomorrow, right? Or what happens, tomorrow? If tomorrow the index, starts to fall further, right? If the index starts to fall further tomorrow, Hang Seng Tech goes down further, by another 2%, then this DLC, the price will drop by another 10% from this reference price of 15.4 cents. If today closes at 15.4 cents, the next day, Hang Seng Tech Index, if it drops by 2%, this DLC should gain 10%. And that 10% gain is based off that 15.4 cents close for today. All right, so that is how it works. Every day on a coast-to-coast basis, you'll get that 7 times performance. All right, so that's how you relate the price of the DLC, 15.4 cents. How does it relate to the underlying stock, underlying index performance? All right, so that's how it moves every day on a coast-to-coast basis with this price. All right, so on the short, of course, it's important to highlight also the downside of it. Today, bearish day, therefore your Hang Seng Tech long DLC, 7 times long DLC SYHW is down by around 15% as well, on the back of Hang Seng Tech dropping around 2+% today. All right, so because the underlying index has dropped, my 7 times long Hang Seng Tech DLC has declined in value by that 7 times kicker as well. Okay, so that's where your gains are magnified, but also your losses are magnified if you get the direction wrong. All right, so again, similar, if today it closes at this level for Hang Seng Tech and the DLC closes at 28.5 cents, all right, if tomorrow instead Hang Seng Tech rebounds tomorrow by, say, 4%, all right, tomorrow rebounds by 4%, times by 7, that's 28% gain on this long DLC. This 28% gain will be on top of this 28.5%. All right, so this 28.5 cents will rise in value, will gain 28% gain from this 28.5 cents level. So tomorrow, if Hang Seng Tech gains 4%, this DLC should be trading well above 30, 40 cents, etc., with that 28% gain as well. Okay, I mean around 30 plus cents for that 28% gain. So our bid and ask prices, you see that SG bid, SG ask over there. So our bid and ask prices, SocGen, when we're quoting, we will move in line. So if tomorrow indeed, this DLC gains that 28% because Hang Seng Tech Index rebounds 4%, for example, then your 28.5 cents will be actually quoting at 37 cents. All right, so tomorrow you'll see that SGB and SGRs will be quoting at 35 cents, 37 cents for you to be able to buy or sell the DLC. So if you bought today at 28.5 cents and it closes at 28.5 cents, tomorrow Hang Seng Tech rebounds back 4%, you would see that the DLC would have be quoting at 37 cents, and you can sell back to SocGen at 37 cents to lock in your profit of 37 cents versus your purchase price of 28.5 cents. Okay, so that's what happens if it rebounds tomorrow. All right, so there is a price matrix that you can also refer to if you're not too clear how that. But basically, it's just using the percentage calculation, right? Where if index goes up by 1%, this DLC will gain 7%. Basically, this matrix helps you to easily calculate or compare that. All right, so if it goes up tomorrow by say 4% gain close to there, then you will see where the price of the DLC will be as well, or if it declines, where the price of the DLC will be as well. Okay, so there's a price matrix that you can refer to as well on this for each and every one of our DLCs. Okay, so I think that's a bit for the Hang Seng Tech DLCs. If you want to gain an exposure, Hang Seng Tech 7 times is actually very ideal for intraday trading. So intraday trading is quite popular on the DLCs. You can trade it intraday. People go in and out. That 15% gain. People will go in and out throughout the day. So I think that is very popular sort of intraday trading for the Hang Seng Tech DLCs. Okay, over to you, Joey.
All right, thank you so much, Marcus, right, for just diving a little bit into DLCs for the HSTECH. So I hope you guys get a better idea, right? Essentially, like what Marcus shared, right? There's a long and there's a short DLC 7 times, right? So you can see right now, maybe let me go to share my screen, right? You can see that I think the HSTECH as well, we have, I think I covered just now. So we are kind of pushing away from that 5,200 resistance. In fact, today, right, I mean, we have gone down, all right, down by about 2%, all right, 2%. You see that we've gone below this a little bit of support around the 5,000 psychological resistance, 5,000 psychological support level. So we have gone down below by about 2%, but this 7x short DLC, 7 times 2 will be like more than 14%, right? So that's how you could potentially make a higher return, all right, if you buy what we call the 7x short DLC and the HSTECH actually moves down. Does it make sense, Juan? All right, so that is kind of like the HSTECH, one of the very popular DLCs that Marcus has informed me on. All right, and maybe we can move on to the next, what I call maybe one of the top few Hong Kong stocks by has been doing really well. You can put it in your watch list as well. So let me go to just share maybe the very first stock for today. And that will be, let me see, right? I would say, okay, let's take a look at this stock right over here. Okay, so this is a stock called Ganfeng Lithium, right? Ganfeng Lithium Group. The code is 1772.HK, right? So this is Ganfeng Lithium, one of those manufacturers of battery, high-level battery-grade lithium fluoride kind of solutions, right? You can see that technically we have been in a very strong longer-term uptrend. This is a little bit different from your Alibaba or your Tencent and stuff, right? This is a little bit different, right? And these were the sectors that have been doing actually quite well in the Hong Kong market, right? Not really a tech stock. The tech stock has been, a bit weak since October, all right? A bit weak still, all right? No clear signs of a reversal yet, but other sectors have been doing really well. And this is one of those stocks as well. You can see that over the past, I would say, few months, we had a couple of bullish signals. Of course, June, July, we got 2 bullish signals, all the way up. Another bullish signal in January went up a bit, all right? Came down. But most recently, what I like is that since March, end of March, right? Even when this US-Iran war is still ongoing, but we actually got 2, not 1, but 2 1GT bullish signals. So I say, I have this tool called the One Good Trend Pro indicator on any stocks, even the Hang Seng Tech index, right? Or even this Hong Kong stock, or Singapore stock, US stock, any asset classes, we can turn it on and get an opinion in seconds. So you see, I turn it off, pump, nothing, right? I turn it on, there we go. It gives me an opinion. And why did this stock come into my watch list? Well, because we got some bullish signals on it about 2 weeks back, and we got an alert on it as well. So we got 2 bullish signals. Of course, it has gone up a little bit already. Now it's like 77.60 Hong Kong dollars. So I would say that the long-term trend is intact. We got 2 bullish signals. Short-term trend in terms of the green line, you can see it was a little bit sideways, a little bit boring from January all the way to March. But when we broke this very key level, all right, I would say this would be what we call the 70 to 75, right? Somewhere over here. Yeah, maybe right over here, right? Maybe about 70, right? 70 to 75 is a very critical resistance level, whereby every time we kind of like touch it since like January, we have sold back down. Same thing over here, you can see. We touch, we sold back down, we touch, we sold back down. But over the past 2 weeks, we actually attempted to break above it, and we push away from it higher. So I think support could come in anywhere from 70 to 75, whereby the uptrend still looks intact, all the way to the maybe 90. I think $90 would be a little bit of a psychological resistance level for now, right? So you could put this stock on your watch list for potentially a long position, maybe even using what we call the long DLC for Ganfeng Lithium, right? From anything from above 70, right? Maybe a bit of a pullback today, right? So if it does hit to those levels, see a couple of bullish candlestick, I think it's where a potential rebound can happen, all right? And that's where you could actually think about magnifying your return using DLCs. Okay, so this is 1772.HK Ganfeng Lithium Group. So let me pass on the mic maybe to Marcus to share a bit on DLCs for this stock. Marcus, back to you.
All right. Okay, Ganfeng is something that is it's quite a beast. All right, on Ganfeng Lithium. All right, so I think there's a lot of renewed focus also on all this lithium battery, CATL, Ganfeng, EV stocks, BYD, NIO, XPeng. So we do have all the DLCs on these EV related names. And I think there have been quite a lot of volatility on these names. I mean, CATL is skyrocketing to the moon. Ganfeng also has been quite bullish, as what Joey has shared. So on this Ganfeng, we do have 3 times or 5 times DLC on them. All right. So we do have the long DLC only. All right. So we only have long DLCs on Ganfeng. So we do not have a short DLC. Primarily because of the borrow market is not so easy. Typically when you buy the short DLC, when investors buy a short DLC from SocGen, we will have to go and borrow the shares to hedge that exposure, right? So that it is not a zero-sum game. We are hedging whatever the exposure that you have, so that we're not against you, right? So if you go and buy the short DLC to get a short exposure to the stock, we have to go and borrow the stock as well to be able to hedge that exposure to be in line with you, to give you that leverage performance. Right, and the borrow market for Ganfeng, not that exciting, not that great. Therefore, we've only stuck to long DLCs for now. In any case, I think people are very bullish on Ganfeng in the past couple of months. So not so much of a bearish of demand. So for this Ganfeng, even though it's down 15% today because of the underlying stock is down around 3% today. Ganfeng is down around 3%. It's a bearish day. But in the midterm, I mean, in the last couple of, actually since start of April, there was a very nice rally on Ganfeng, right? Ganfeng stock. So our 5 times long Ganfeng DLC NUMW. If I look at from just start of April, and then the first 14 days of April, it actually made a nice gain of 69%. All right, 69% on this Ganfeng 5 times long DLC. All right, and then on the back of Ganfeng stock gaining 13.5%. All right, so that's where the roughly around 5 times performance is this 14-day period. All right, start of April to 14th of April, that nice uptrend. If you had caught that, Joey's signal indicator, etc., and bought the 5 times long Ganfeng at early April, you could look at this kind of like 69-70% gain within this 14 trading day period. By buying the 5 times long Ganfeng DLC NUMW. All right, but Ganfeng is quite a volatile stock. It can move 8% a day, 9% a day. Times by 5, that's like a 40% gain, but 40% loss as well, possibly if you get it in direction wrong. All right, so it's quite a volatile stock, and therefore we also have the 3 times long for those who are a bit more, okay, I want to get exposure to Ganfeng, but I don't want so high leverage 5 times. Maybe let me go lower a bit, 3 times risk management, etc. So we do have the 3 times long Ganfeng DLC as well, GODW, all right? So GODW, can anyone guess, what was the listing price of this Ganfeng DLC, right? It was listed last September, October period in 2025. And the listing price, anyone can guess what's the price where it first listed at? Now currently it's trading at $4.28. Any guesses? Any guesses? Joey, why don't you guess what's the price for this when it's listed last October or September?
Maybe about $3, $2? I don't know, $3.50.
No, it was listed at $1. All right, so it was listed at $1. So you have kind of like 4-5x your price. If you had bought the 3 times, just a 3 times leverage DLC, 3 times long DLC, we bought it last year in October period, and you held it to early April, I think 14th of April. The DLC will have gained in value from $1 to $5. All right, so that's where the power of compounding is as well. From $1 go up to $5. That's like almost like a 400% gain, from the listing price. But of course, you shouldn't be holding on the DLC for so many months: October, November, January, February, March. That's like almost like 5-6 months. That's not really the holding period that we will recommend. All right, for DLCs, generally we recommend holding it for intraday, a few days or a few weeks.
Yep.
Yeah, it should not be long term. It should not be for months at end. But of course, if you have such conviction, etc., and you actually bought the Ganfeng DLC at $1 and you held it until now, you will have got that nice compounding gains. But this is not what we recommend, all right? Because of the compounding effect, which I encourage everyone to read up about as well on our education page over here. Compounding effect can work very nice for you in a nice trending market like Ganfeng, but it can work against you in a sideways or volatile market. So it's important to understand the compounding effect of the DLC. This is a feature that's apparent in all leverage and inverse products, including LNI ETFs, leverage ETFs. They will have this compounding effect feature that you should read up on. But anyway, you see over here, 3 times leverage, in this 1 month holding period, it's already very nice gains. In a 1 month holding period, if you bought the Ganfeng DLC at $2, in the end of March, and you held it 1 month till 14th of April, Ganfeng had gained 40%. All right, 41%. 41% gain on Ganfeng, lithium stock. But the DLC, from $2, it had risen up to $5.11. That's a 156% gain on the DLC. So 40% times by 3. This is a 3 times long only. 40% times by 3 is 120%, but my DLC gained 156%. All right, so more than the 3 times performance. This is because of the compounded gains, right? The compounding effect, where in a nice uptrend like this, the DLC's gains are locked in every day. And so the compounded gains will give you more than the 3 times performance as in a nice uptrend like this. And that's where the compounding effect can work very well for you. But of course, in a sideways or volatile market, the DLC might not work so well for you. So for example, maybe a 6-month time frame. Let's just have a look. So 6-month time frame, if you had held the Ganfeng long DLC for a 6-month time frame, all right, over here since since the October period, right? All right, even though Ganfeng is up 87%, in this 6-month time frame, but times by 3, that's about 240%. All right, so you can see that the Ganfeng 3 times long DLC only gained 176%, and not that 240%. You get less than the 3 times performance because of the compounding effect. Of course, there's a lot of sideways movement as well, even though it's a general uptrend. So therefore, the compounding effect did not work very well for you. In this case, 6-month holding period, where even though the stock is up by 80+%, the DLC only gained 176%, less than the 3 times performance. All right, so 1 month holding period is more or less ideal, to get that compounded return again. So therefore, we recommend that really the DLC should be for intraday trading, swing trade, a few days, a few weeks, but please do not hold the DLCs for months. Okay,
more for short term, like more for short term.
Short term trading.
Yeah, and Marcus, we have some questions. Will you want to take some of those questions? I think they're very, very good questions. Like, Peter is asking, what is the date beside the DLC? Telling us, I think probably the expiry date. Maybe on.
Yeah. So there is the exchange trading name. There's a 6-digit number at the back, the expiry date. So the 6 digit is actually the expiry date in year, month, date format. So this DLC will expire in 14 September 2027. All right. So all our DLCs are generally long dated. It's either a 2 years or a 3 years maturity. All right. And with a maximum of 3 years. But here I want to clarify that technically the DLCs don't need to have an expiry date. All right. Like your leverage and inverse ETFs, right? Those in the US, etc., L9 ETFs, there is no expiry date. It's more or less open-ended. All right. So the DLCs technically can also be open-ended. All right. There should not be a need for an expiry date. But due to the certain exchange regulations, the DLCs have to have an expiry, and it's usually 2 or 3 years of maturity. All right. But the expiry date does not affect the performance of the DLC at all. Compared to, say, options or warrants, for example, you might have to really take into account the expiry date, because the closer it gets to the expiry date, the time decay will accelerate towards expiry. And also there can be whether it expires in the money or out of the money kind of concept that is pertaining to warrant for expiry date. But for the DLCs, the expiry date does not affect the performance of the DLC at all. If tomorrow the DLC expires tomorrow, for example, right? Tomorrow, 23rd April, if the DLC expires and this DLC closed at $4.28 today, we will just cash settle back this $4.28 to holders. All right. So every day from the date listed until the expiry date, you will keep having that 3 times performance in line with Ganfeng's daily percentage performance all the way up to expiry date. And whatever is the value of the DLC is at the point of expiry, we will just cash settle it back to holders via the SGX CDP. So you receive the cash settlement amount the same way that you receive your DBS shares dividend or your stock shares dividend from SGX. The same way that you receive those dividends, you will receive this cash settlement amount as well. All right. So there's no strike price, there's no in the money, out of the money kind of concept. So you don't need to worry too much about the expiry date in the sense that, will it expire out of the money? There's no such thing. All right. So this DLC, whatever is the value at the point of expiry, we'll just cash settle it back to holders via the SGX. All right. Of course, try not to choose a DLC that expires too soon, because if your view is that in the next 2 weeks, Ganfeng would have another up leg, another leg up, and I want to ride that leg up with this 3 times long Ganfeng DLC. All right, then you definitely don't want to choose a DLC that will expire in the next 5 days, right? If your view is 2 weeks, right? So you wanted to choose the DLC that perhaps longer dated, at least longer than your investment horizon. If you are thinking that your view is 1 month, you're going to give it 1 month for your trade to play out. Then perhaps choosing a DLC that will expire at least 6 months later or 1 year later will be more ideal. Okay, so we will have a few DLCs as well. At the point, if the DLC is going to expire soon, we'll definitely issue a new DLC for you to trade the underlying with a longer dated expiry. Okay.
All right, thank you so much, Marcus. I think we have a few questions, but not to worry, guys. We'll go through your questions one by one. All right, maybe I can share with you guys maybe like just one more Hong Kong stock, and then Marcus, same thing, can go on to talk about some of the questions as well. Right, so let me go ahead maybe to share my screen. All right, let's just go back to the chart, right? So very simple. So we talk about this stock called Ganfeng Lithium, right? As I mentioned, we got some bullish signals right over here somewhere end of April, and I think Marcus talked about DLCs, right? Exactly like how perhaps if you have got in based on these bullish signals, the underlying stock, the Hong Kong stock that's listed on the Hong Kong exchange, and it went up by about 20-30%, right? 30%, but based on the 3x long DLC, right? 30 times 3 is what? 90%, right? Just by getting on this long DLC, right? So that's how you can potentially, to take a kind of a short-term trading view, right? Not to hold for like months or years, but you want to take a short-term trading view. That's how DLC can potentially magnify your return, right? Just from the same underlying stock. Okay. Now let me go ahead to just share with you guys maybe the next stock for today, all right, which I'll share with you guys, and that would be, I would say, Baidu, right? One of the tech stocks that thankfully, it seems like some strength have came out over the past, I would say, past few days, right? So let me just go through very quickly. So you can see that I've already turned on what I call the 1GT bullish and bearish signal. So I've turned it off. You can see that's what most people see, right? The moving averages and the price, of course, right? So let me turn it on. You can see very quickly what has happened to Baidu, right, over the past few months. So since, like, I would say last year has been really volatile, right? Every time, September, we got a bullish signal, all the way up, bearish, it starts coming down a bit, sideways. December, we got 2 bullish signals. There we go. All right, a bearish one came out. It went down again with the rest of the other technology stocks. But over the past few days, well, these stocks have came back into my watch list, all right, because there could be some signs of a potential reversal. So this is a very key level. I'm not saying that it will go all the way up right now or it's going to reverse, but I think there are some signs of it reversing, especially if we do get more confirmations. That is where it can be even more bullish, right? So what would be the first sign that we look at? Well, essentially, we can see that we got finally a new 1 GT bullish signal, right? Not after 1 week or 1 month, after 2 months of it going down and down and down, all right? Or finally, we got a 1 GT bullish signal. It could mean that some strength is coming back, right? Buyers are starting to come back up to attempt to push Baidu even higher, right? That would be one confirmation. Well, if you take a look at the green 20 days moving average line, same thing. You can see this green 20 days moving average line that represents the short-term trend. It was up, right, somewhere in January, and then it was flat. We got a bearish signal, and then what? It starts coming down, all the way down, right, for like 2 months. Does it make sense, Bob? All right. But over the past few days, well, there are some signs of this green line just starting to point up, just starting only. I mean, it's only 1-2 days, right? Just starting to point out, right? So there are some signs would be of another confirmation whereby the short-term trend could start to reverse back up. So I would say that a very key level to take note of would be, to just get another added confirmation would be if we can break above this 130 psychological resistance level. Why is it the 130? Well, very simple. You can see that this 130, it has been a resistance right over here in November. We came down, we neared it again, we came down, and finally we broke above it. All right, you can see we've got 2 bullish signals in January, all the way up. All right, so same thing, right? Same thing. Over here, we neared the 130, 125, we came back down. So now we are like quite near, kind of like attempting to near the 130 resistance level. So if, same thing, if we can break the 130 Hong Kong dollars for Baidu, right? I think that is where it could be poised to hit even higher because start to see a bit more upside momentum coming back, right? And that could be where one can have a long position, a trade plan, right? To ride the reversal, to ride the upside all the way from 130 towards the previous high at $160. And that would be easily for the underlying stock, right? Easily a 21% on the underlying stock, right? Just if you buy the stock by itself, right? About 21% upside. If we break the 130, maybe we might get another one. So here we got 2, right? 1, 2. Now we only got 1, right? But if we get another 1 GT bullish signal, right? Plus we break the 130, okay, good. That's where, I mean, I don't know whether it'll be like this, but can you guys see that could be another confirmation of the reversal trade all the way back up, right? So 20% from the underlying stock. Now, let me pass on the mic to Marcus to share with you guys what if, right, you don't just buy the underlying. What if you were to buy what we call the DLCs for Baidu, right? Whether is it the 5x one or the 3x leverage one? What could be your potential gain? What would be the DLC to actually think about getting it? So let me pass on the mic to Marcus. Marcus, back to you.
All right. So Baidu, yes. Baidu, it has been, I think, like what Joey has mentioned, some signs of breaking the short-term downtrend. All right. And I think definitely Baidu, we have a 5 times long, 5 times short DLC on Baidu. All right. So our 5 times long DLC on Baidu is JVWW. All right. So we have this DLC JVWW that you can search on your platform, brokerage platform, search for JVWW. You see this Baidu long DLC. All right. So this one, it's around 52 cents right now. I think you can see, today is again a bearish day, so this long DLC is suffering. All right, on the bearish day like today. But generally across the last 5 trading day period, this DLC has gained around 24%. All right, on the back of Baidu's recent sort of rally in the last couple of days. So that 20+% is quite decent as well. But if you think there's more upside, then you could consider this 5 times long Baidu DLC as well, right? So today, intraday, of course, the 5 times short DLC on Baidu V2UW is making a nice gain, intraday gain today, because Baidu is down around 3%, so around 15% gain, 14 to 15% gain. You can see the graph here, the inverse relationship, right? So the DLC would gain in value if the underlying stock goes down, but it will lose in value if the underlying stock goes up. So you can see over the last 5 trading day period, it has suffered quite a bit on the back of Baidu, rallying over the last couple of days. So we have 5 times short, 5 times long DLC on Baidu. I want to just take a very quick time to look at on our page. If you want to look for Baidu, you look for Baidu on the underlying other products. You look for Baidu over here, and I think the last thing I want to cover on the DLC, quite important information, is over here. All right, so you can see we have 4 Baidu DLCs listed, right? So if you want the short DLC, for example, then there is 2 short Baidu DLCs. All right, so I hope you can see that quite clearly. Do you see a red star indicator over there? All right, so the red star indicator is how we try to tell investors that please choose the right DLC, the DLC that is the most sensitive to the underlying movement. All right, so sensitivity refers to how much must the underlying stock move, how much must Baidu move before this short DLC can move by 1 minimum bid size or one tick. All right, so a DLC that is highly sensitive will require the least amount of underlying stock move for it to move 1 tick. And generally, the higher the price of the DLC, the more sensitive it is. So you can see over here, our Baidu short DLC V2UW with the red star indicator, has a sensitivity of 53 cents. All right, 53 cents move on Baidu will trigger a 1 tick move on this Baidu DLC. Right, the formula is still the same. 1% move on Baidu, stock should give a 5% move on Baidu short DLC. All right, so if Baidu goes down by 1%, Baidu short DLC should go up to gain in value by 5%. All right, but how does it translate into tick movement? All right, it's important. So both DLCs here, 5 times short DLCs will give you that 5 times performance in terms of percentage, but in terms of the tick range, it depends on the sensitivity. All right, so this one requires 53 cents move on Baidu to move 1 tick. 1 tick over here is 0.005, so half a cent. All right, for the other one, this Baidu short DLC WC5W. All right, it has fallen to quite a low price level. All right, so this one, is down to like a 0.3%, 0.4% price level. All right, so the sensitivity is crazy. All right, it requires a $8 move on Baidu before you can even move 1 tick, because 1 tick over here, 0.001 divided by 0.003 is like a 33% move 1 tick. All right, 1 tick to move 1 tick, 33+%. So Baidu has to move 33 divided by 5. It has to move 6% in order for this DLC to move 1 tick. All right, so it is very insensitive. It requires a large movement on the underlying stock before it can even move by 1 tick. So generally, we hope that investors can avoid the low price DLC, because the higher the price of the DLC, the more sensitive it is to the underlying stock. All right, so lower price doesn't mean cheaper. All right, it doesn't mean that the DLC is cheaper. Right, a 3 cents or 5 cents DLC is nowhere, not in any way better than a 30 cents or 40 cents or $1 DLC or $2 DLC. In fact, the higher the price is better. The $4 DLC that you saw on Ganfeng just now, 3 times long Ganfeng, the $4 plus, that's the best. All right, it's very sensitive to the underlying stock, where a very small movement on the underlying stock will trigger a few ticks move on the DLC, and it's ideal for active traders. All right, you can break even faster. All right, you can break even on your trade faster with a more sensitive DLC. So always try to choose a DLC that is more sensitive. And if in doubt, always look out for the red star indicator for each and every pair of our DLCs. Whether it's for both the long and short direction, we will indicate which is the most sensitive one with a red star indicator. All right, so always look out for the red star indicator for you to choose the right DLC. So that's one benefit of coming to our website, dlc.socgen.com, to search for the DLC that you want before going into your brokerage trading account to trade the DLC. All right, so in this case, if you want to short Baidu, please look out for V2UW instead of WC5W. All right, so the V2UW should be the one you choose if you want to do a short exposure to Baidu. Okay, otherwise, long exposure, we have JVWW. All right, JVWW, but both are quite okay. All right, both are relatively good price in terms of high price enough, such as sensitivity is good enough. But of course, the most sensitive one is your RZGW with the red star indicator over here for the Baidu long DLC. Okay.
Right. So yeah, guys. So take note. I think what Marcus have shared very important. So always, and the link is in the chat, guys. By the way, right, to go to this SocGen website to search for the DLC. Make sure you kind of choose the one that has the one that's more sensitive. right? Okay, and I think there's some questions again, Marcus. Why not let's go through the questions, while we are going through the top stocks case study, right? Another question by Palvej as well. Palvej, let's take a look, right? Risk exposure is the amount, I think the risk exposure, right, is the amount we invest. Am I right? In case of a trend move not in our favor, so what would that be, Marcus?
Yeah, of course. Yeah. So I think if I get right, he's trying to say, what's my maximum risk, right? What's my maximum downside?
Exactly.
All right. So I think that's important to note that for the DLCs, the maximum loss is whatever they've invested. All right. If I put in $1,000, I buy $1,000 worth of this Baidu DLC. All right. The maximum I can lose is $1,000 only. Even if Baidu, say you bought the long DLC RZGW and Baidu drops by 30% overnight. All right. It gaps down 30%. All right, 30% gaps down, right? 30% times by 5 is 150% loss, all right? But your maximum loss is only 100%. So your $1,000 is 100%, and that is loss. I mean, it's not easy to swallow 100% loss, but at least you're not going to have to suffer that 150% loss. The additional 50% is not something that you will owe to the broker or owe to SocGen or anything. Your maximum loss is only 100%. That 50% is for SocGen to hedge that risk over there. All right. So maximum loss is kept at your invested amount. Is a short answer.
Yep. Very good question. All right. So that is the how much invest. That's the maximum amount you can lose, right? You will not lose more than that. Need to top up one. No. All right. That's the maximum. All right. Okay. I think one more question. Keep going. It means we can hold it to expiry date. Yeah, we can. But Marcus,
you can hold it to expiry date. Like I said, there is no sort of like there really is no it does not affect the performance of the DLC at all, right? So you hold it to expiry date, whatever it is the value of the DLC at expiry date, we'll just cash settle it back to holders. All right. But of course, try not to hold too close to try not to choose the DLC that's expiring too soon. If your investment or your trade horizon is 2 weeks or 3 weeks, you do not want to choose a DLC that will expire in 2 days or 3 days. Then you cannot get that exposure that you want across the time period. All right. So look out for the expiry date as well. But the expiry date generally, it does not affect the performance of the DLC at all.
Okay, very good. One more. I think let's take one more question before we move on to the next stock, right? Peter, so upon expiry, it will be cash settled and not roll over to the next new DLC?
Yeah, unfortunately, there's no this kind of concept where you roll over. I wish, because we are still talking to the exchange to try and do no expiry date. I mean, that's something that is still very much in discussion. But unfortunately, if you upon expiry you're holding on to the DLC, you will cash settle, then you will receive your funds from SGX. SGX will pay SGX will pay the holders. I think within 5 business days or 7 business days around there, you should get the funds back. And then you have to initiate a new position on the new DLC if you want to continue the exposure. So so again, therefore, try not to hold the DLC that's too close to expiry. All right, because there will be a bit of the hassle where you have to wait about 5 days to get the cash settlement amount before you can initiate a new position on the new DLC. So try to choose the DLC that is longer data expiry, at least way more than what your investment horizon is. If you're going to want to hold it for 2 weeks, try to choose a DLC that's going to expire in like 6 months at least. All right.
I think we've got one more very interesting question because we mentioned DLC is more for short term, right? But I think YL4800, why DLC is more recommended for short term since you actually can hold all the way to expiry, you'll be refunded, and cash settled. What's your take?
Yeah. Yeah. Okay. So it's really more on the payoff of the product. All right. Okay. There's two components to this, but the more important component is really the compounding effect. All right. So there's something that we want to caution everyone, because whenever you trade any leverage and inverse products, LNI, ETFs, all right, and DLCs, this kind of LNI payoff will have that compounding effect where every day your gains and losses are locked in. All right. So of course, if it's a nice uptrend all the way from your trade all the way to expiry, you can hold as long as you want. But if it's been a nice uptrend throughout your whole holding period, definitely if you bought the 5 times long DLC, you'll be sitting on very, very nice returns, right? You can get more than the 5 times leverage because of a very nice uptrend. You bought the long DLC. Even if you hold it for 6 months, it's a nice uptrend during the next 6 months, and your DLC will be having spectacular gains, all right? But we don't always know how it will play out. That's why we are quite cautious here. And a DLC works very well. The compounding effect works very well in a nice uptrend. But what happens if it's a sideways market? Okay, it goes up, it goes down, it goes up, goes down, goes up, goes down, all the way, in the 6-month period, and the underlying is back at flat, all right, in the next 6 months. But the DLC could be suffering losses, could still be in the red because of the compounding effect, all right? Because of this compounding effect, and also in the longer run, the longer you hold, the more at risk that you might encounter this kind of a sideways or volatile market. All right, markets are generally sideways in the longer as you go longer in terms of the
we will not go up every single day for 3-4 months every single day, and most of the time it might consolidate.
Markets are generally sideways.
It makes sense. So I think what market is trying to say is that you can hold on if you want. Of course, it's a very nice uptrending market, go up, then sideways for one day, then go up again, then good. I mean, that's where you really can compound your returns. But the sense is that when we say short term, it's more like we don't want you to just buy and then leave it there and then take it like an investment for a couple of months or years. That should not be the mentality, because this is what we call a leverage kind of product. All right.
Yes. I think Joey mentioned a very good point. It's like it's not that we say you cannot hold it long term, but you must be willing to monitor your position actively. Yes. All right. The moment you see the trend break, it is quite a good indication for you to take some off the table. All right. Exactly. Because this is really not a buy and hold product.
No, buy and hold.
There's also, it's a leverage product, so there's also an overnight funding cost, just for everyone's information, that we publish every day on our website. So the overnight cost, of course, you hold it for intraday. Intraday there's no overnight cost, but if you hold it for a day or a few days or a few weeks, the cost should generally be negligible. But if you hold it for a year, this funding cost to give you that leverage, it can add up. All right, you can be looking at 15% to 20% off the price of your investment just from this overnight funding cost if you hold it for a whole year. All right, so funding cost is also another reason why you shouldn't be holding it for long term, because it's a leverage product. We're giving you that funding exposure. It's a cost to us as well. You could be looking at 15 to 20% just based on losses, just based on funding cost itself. All right, so that's common for all leverage products out there. Whether is it margin products, whether is it other kind of leverage products, there is that holding cost. That's why it should not be really for long term.
Exactly. Well said. Okay, let's move on, Marcus. Maybe if I can share my screen, we can move on maybe to the next stock. All right. So I've covered Baidu. All right, and Marcus have shared a bit on DLCs for Baidu. All right, for the long, maybe for the short as well. So I hope you guys have a better understanding. Now let's move on maybe to the next Hong Kong stock. All right, maybe just two more Hong Kong stock. I think this would be another Hong Kong stock whereby I think not too bad. Let me go to pull it out. That would be, let's see where we go. There we go. Right over here. Okay, China Mobile Limited, all right? The underlying stock listed in Hong Kong would be 0941.HK. So same thing, I've set an alert. I got some pretty good signals coming. You can see right over here. Okay, I'll not go too far, but since December, we got not one, but we got two. Pam. All right. So, if you would have seen this very signal, if you're holding on to it, then please get out. Or maybe you could also take what we call a short DLC position. Imagine if the underlying has gone down by all the way down by 10%. All right, if you've taken a 5x short DLC, 10 times 5, more than 50% potentially. Right, so if you see a short kind of like a bearish signal, short-term trend turn down, that's where if you're holding on, you want to get out and plan, right? Or you could also, as I say, right, with this short DLC, you could ride the downside and profit as it goes down. Okay, but I'm not asking you to do that. That was in December, right? Now let's take a look at what is happening right now in terms of over the past few days. This stock came back into my watch list again. So you can see finally after like 3-4 months, we got a brand new 1 GT bullish signal. Right, so there's a sign of strength. Right, after 3-4 months of selling, we got a bullish signal coming back. Right, something like over here. Right, we got a bearish signal. We got 2 new one coming back last year, and there we go, pump. Right, go even higher. Same thing every time. We got bearish signals. It goes down for 1-2 weeks. A new one comes back. Another one comes back. All the way up. Right, so are we potentially seeing a reversal right now based on the new 1 GT bullish signal? Maybe, right? High chance, high probability, right? And why? So we got a 1 GT bullish signal, but that is just one confirmation, right? Doesn't mean you get a bullish signal means you any others can buy. No, right? We have what we call a 7-step checklist, right? A bullish signal will be just one pretty good, decent confirmation. But if we get a bullish signal plus the short-term trend, the green line, there was like sideways. It was like down, sideways, and then now starting to point up. So it's another confirmation. that will be another confirmation as well. All right, and you can see that we have also broken what I call the 81 or 82, 81, 82. Look at this, right? A little bit of resistance here. We broke it somewhere in May last year. We saw the rally, right? We were consolidating below these 80, 82. And yeah, over the past few days, we've gone above this resistance level as well. So not too bad. I think that's where we could potentially start to see a bit of upside. All right, target could be our previous high. We've seen all the way around that 88 to maybe that $90, level, right? So that could be the upside. All right, I would say from here, maybe all the way to here, another 7 to 8%. All right, just from the underlying stock, right? 7 to 8% based on the underlying stock. But what if you were to not buy the underlying? What if you to buy what we call the DLC long position, right? Would it be 7-8%, right? Or would it be more, right? So let me pass on the mic to Marcus to share a bit more on China Mobile DLC. Marcus?
All right. Yeah, we'll do a quick one on this. So I think we still have one more to cover. So China Mobile, right? CMOB, it's just short for China Mobile. You couldn't have you couldn't spell the whole thing. So we have the 5 times long CMOB DLC. The code is ECTW. China Mobile, I think it's been on a nice uptrend in the last couple of weeks, right? So you can see definitely in the last 1 month time frame, you can see the DLC has already gained about 37% on the back of the 7.5% move on China Mobile. So if it does go up by another 7.5% or 7 to 8%, like what the green arrow you saw there, if it goes up to the next high, Joey, that was another 7.8% kicker, right?
Yep, about 7% upside all the way.
If it does go up a next leg up, from today's level, another 7 to 8%, definitely ECTW, this 5 times long DLC, will be having another 30 to 40% gain, in the next leg up. So that's where the gains you can see that the kicker, you can get that 5 times performance. 7-8% might not be so exciting for you guys, for some of you out there, but that 30 to 40% hopefully will be more exciting. And for a short-term trade, if you can get the next leg up, if it indeed happens, all right. Of course, gain losses are if you take that direction view. If you take that view of a DLC of a short, you want to short China Mobile, definitely you can consider the short DLC LIFW. But yes, it hasn't been performing so well because of the bullish indicators or run on CMOB. Okay, so this is a short one. So we have long and short. For CMOB, we only have one long, one short, so you don't have to worry too much about that red star indicator or sensitivity thing. Just choose ECTW if you're long, or choose LIFW if you're short, if you want to go short. Okay, yep.
All right, thank you so much, Marcus. All right, so let's move on maybe to the final one. All right, final stock, and that would be next one. So we have covered like China Mobile, right? So I think the next one I'll share with you guys, the last one for today would be Ping An Insurance, right? The underlying stock 2318.HK. So I would say that Ping An Insurance has been one of those, since last year, very steady, very, very consistent kind of uptrend, right? You can see that we have the 100 days moving average, the red line pointing up, the blue line pointing up. So long-term trend is up, right? Since last year, it's been up, right? You can see we got a couple of bullish signals since May, and then we go all the way up. We got a bearish signal, went down for like maybe 1 month, take a break. A few more bullish signals came in, all the way up. Of course, somewhere around like, March when the US-Iran war started, saw weakness as well. We got a bearish signal. It came down, all right? So we have been seeing weakness over the past 1 month. So why am I showing you guys this stock when we got a bearish signal coming out, right? I mean, there's no bullish new one out yet, right? Well, what if a new bullish signal were to appear? Would you want to be alerted, right? Definitely, I would want to, because you can see that every time it appears, pump, there we go, pump, there we go, right? So it hasn't appeared yet, but if it does appear, and I think that, potentially if you were to break like 65, so maybe if I can draw some resistance level for you, I would say some resistance maybe around that 65, right? If I can draw it for you, right over here, $65. We have been trading below for more than a month. Up, down, went up, came back down again. So it's a very key resistance level. If we can break the 65, we get a new 1 GT bullish signal, like something like what we saw over here last year in November. All right. And if the green, so this green 20 days moving average line that represents the short-term trend, you can see it was down. Now it's flat, right? Is it up yet? Not yet, right? Is it going to be up? Potentially. I mean, if we break 65 and if the green 20 days moving average line starts to turn up, like what we have seen previously in November, right? You can see the long-term trend is up. We got bullish signals. The short-term trend turned up. what happens? So same thing, right? If we break 65, we get a new bullish signal. The short-term trend turn up. The long-term trend, don't need to say, already up since last year, right? That could, put it on a reversal course all the way towards the 77, 76 resistance level. And based on this move, a bit more of a reversal rebound play, all right? Based on this, it'll be easily about a 15% upside just from the underlying stock for Ping An Insurance, right? 15%, right? So let me pass the mic to Marcus. We just talk about DLC very quickly, right? How many percent would that be for the DLC gain, right? Marcus?
Right. So on the Ping An stock, we also have the DLCs, 5 times long, 5 times short DLCs. Today's Ping An is relatively flat, all right? But our long DLC is RCDW, 5 times long Ping An DLC. Price is around $1 right now, all right? So this one, it's not a very volatile stock, Ping An, all right? So I think definitely, it will not be so much for a swing, intraday trade kind of thing. But Ping An could be more of a swing trade, like what Joey mentioned. If it goes above that, that level, there could be a nice swing trade that you could do, and you can use the 5 times long Ping An DLC RCDW to ride that trend over there. All right. So that is on the long side. Of course, on the short side, we also have the DLC 5 times short Ping An LMWW over here. Price also around $1 plus. Right. So please do not be afraid of a $1 plus or $1 DLC. All right. These are actually very good DLCs, very sensitive ones. It's not expensive because it's essentially the same, right? I put in $1,000 on a 5 cents DLC or a $1 DLC. It's still the same $1,000 exposure. All right. So and then the 5 times works on that basis. Whether is it a 5 cent DLC or a $1 DLC, the percentage performance is still the same. If Ping An goes up by 2% tomorrow, my 5 times long DLC will go up by 10% tomorrow. All right. So it's basically that. So do not be afraid of the higher price DLCs. They are in fact good and ideal for your gaining exposure to the underlying stock. All right, so Ping An long DLC, RCDW, short DLC, LMWW. You can find the full list of DLCs on our website over here. So we've only gone through a few of the Hong Kong stocks once over here, but please, I encourage everyone to take a look and have a view and have a look at the range of offerings that the DLC can give you exposure to. Whether is it US stocks? US stocks, we have a dedicated tab by itself over here. On Palantir, Tesla, Nvidia, all our DLCs 3 times long, 3 times short are over here as well. On the Palantir one, actually Micron has been quite interesting recently. So please visit our website to see the range of offerings that we have. We only managed to cover a subset today, all right. But definitely a lot of Hong Kong stocks, Kuaishou, Bilibili, Baidu, Alibaba, Tencent, BYD. We do have a wide range, all right. So it's quite exciting, all right. So we are really very proud of our shelves that we've expanded over the years to over 200 DLCs covering 3 markets. And you can get exposure to all these markets by using an SGX listed instrument. So you can just, it's a convenience, right? You're familiar with the Singapore stock market, 100 unit board lot size. You are clear of how the settlement works, etc., the regulatory framework. So you can find comfort in using these SGX instruments to gain exposure to Hong Kong stocks or even to the US stocks, from here on the SGX. Okay, so visit our website. Under the education tab, you can find out more about the compounding effect that I shared about over here, illustrations on the compounding effect. Important for you to understand that. I also have videos that you can look at over here, short clip videos that you can understand how to select the right DLC for your target exposure, what are the benefits, what's the compounded return. So please visit our website, dlc.socgen.com, to learn more about the DLCs. All right.
Yep. So the link is in the chat, guys. I think Marcus has talked a little bit on how you can actually search any of the underlying stock to see whether there's DLC, what DLC. So link is right in the chat. Click on it, go to SocGen.com website, and that's where you can see for the underlying stocks whether you could potentially take what we call a DLC long or short position. All right. So I think that's it, guys. We've almost come to the end of today's live show, whereby I hope you guys are a little bit clearer. All right, type V for value, guys. If you are a little bit clearer, you got some value on this entire Hong Kong stocks that we shared, Hang Seng Tech, all right, and even on DLC daily leverage certificate. Let me know, guys, you got some value. We'll make sure all of you at least learn something. And it's very rare that we get markers, right? Not every time we can catch markers. So I hope you guys we got an expert right over here. I hope that he has answered some of the questions that you guys have put in chat as well. All right. So let me know you got value. Let me know.
All right, one last thing also on our website, there is a hotline as well. Just a quick one. I mean, we cannot cover everything today, but if you have any questions on the DLCs, any feedback, we have a hotline number on our website, the top right-hand corner, 6226-2828. My team and I will on standby during SGX market hours to answer any questions that you have. All right, so please definitely give us a call, share me your feedback, whether you have see any value on the DLCs as well, any particular underlying stock you want. We're happy to answer your questions. Just give us a ring. All right. Thank you.
All right, thank you. So value, Fiona, Chi Seng, good to see you as well. Value, Sifang, Kim Wing, value. All right. So thank you so much for joining us, guys. We'll see you guys maybe the next time, right? So let me just do a quick recap. We covered the HSTECH Index. We covered Ganfeng Lithium. We covered Baidu, China Mobile, and even Ping An Insurance, right? So these are the 4 stocks which I'll share with you guys today. Marcus has talked about DLCs on it. Do put them in your watch list, all right? If the levels that I talk about are breached, we could potentially see even more upside as well, right? And by the way, guys, I want to share with you, right? So the link is in the chat regarding the dlc.socgen.com website. But if you want to come like test drive my one good trend light indicator for free, all right, for 14 days, the one whereby in the matter of seconds you can turn on the bullish and even bearish signals. Link is right in the chat as well. Check it out, right? That's where you could also have a tool like us, right, to know when to get in, when to get out. All right, so that the emotions will not come to the picture. You will not second guess, overthink, and get overwhelmed. All right, so link is right in the chat. Right. So anything to add, Marcus? For final for DLC, Marcus? Anything?
Trade safe, guys, and I think it's really interesting times. I think there's a lot of opportunities in the market. I honestly think a buy and hold strategy might not work so well in 2026. So I mean, definitely have on hand a tactical instrument that you can use just in case. Of course, it should not be your whole portfolio. 10%, 15% of your portfolio you can use for a tactical positioning in the market with the DLCs. I think that would potentially be able to help you, with your portfolio overall in such volatile times. All right, so just have it on hand. When an opportunity comes, it will come. That you have an instrument that you can trade both directions of the market, and to trade a short-term move, you have these DLCs ready for you to use. All right. Thank you very much, Joey.
Yeah. Good one. So hopefully the volatility will be lesser. I mean, the next video I think will be pretty crucial, right? Hopefully this whole entire ceasefire will be extended. There will be a peace deal that being made by the US and Iran, not just in Hong Kong, but Singapore, US, right? Hopefully market will get a bit more direction. Right? So at least now you guys know that there's a tool called DLC whereby you could potentially use, all right, to take a position, all right, to magnify your return. All right, so that's it, guys. We'll see you guys again. Thank you so much for Marcus for joining us today. Welcome. All right, and we see you guys in the next live show again, whereby hopefully we have Marcus here to add more value to you guys on daily leverage certificates DLC. All right, so Joey here signing off. Take care. Bye. Bye, everyone. Bye. See you again.